Welcome to your daily dose of dividend. Today we're going to take a look at the top 10 stocks for May. And out of all the dividend companies we analyzed last month, these are the top 10 highest stocks with the highest scores. And if two companies get the same score, the one with the larger market cap is going to rank higher. Let's get into it. And at 10th place we have Sherwin-Williams, a chemicals paint company. It has the score 8 out of 10. And it falls a bit short on the dividend yield and also quite a lot of debt compared to its free cash flow. Otherwise, both earnings and earnings estimates and also return of capital looks really great. And it has been paying dividends consecutively for over 43 years. It has actually increased it every year for 43 years. So it looks like a great company. At 8th place, we have Costco. Also with a score of 8 out of 10. And same here, it falls a bit short on the dividend yield. It's not really a dividend play with only 0.62% yield. But yeah, it has great numbers overall, especially return of capital, and the debt is quite low. Number 7, we have the drug manufacturer Eli Lilly. And here we can see it's quite overvalued right now. It has great numbers overall, especially its earnings growth. A bit low on the dividend yield, and it's not been growing its dividend for very long. Next one, we have Procter & Gamble, also with a score 8 out of 10 points. And it's a bit more mature company, so it's not growing its sales and earnings at the same pace, but it has over 65 years of consecutive dividend raises, so it's a dividend king. And yeah, very nice company overall. Next one, we have Snap-on. That's a tools and accessories company, and this one got actually 9 out of 10 points. It has a really nice dividend data with both good yield ratio, growth rate, and dividend years. But analysts think the earnings is gonna be a bit lackluster in the future, so worth keeping an eye on, but the future might not be the best. And here we have 10th to 6th place so far with Sherwin-Williams, Costco, Eli Lilly, Procter & Gamble, and Snap-on so far. And on 5th place we have A.O. Smith, a specialty industrial machinery company, and it's got the score 9 out of 10. And it has very nice numbers overall. It's just a bit low on the yield side. Otherwise, this looks like a really good company. It also has really low debt, only 0.39 years to pay it off its debt with its cash flow. And also very high return on capital, 19.15%. And as far as I know, this company is working in the water industry, water heating, cleaning, and so on. And I think water is maybe gonna be the next oil and gold in the future. So yeah, might be a good one in your dividend portfolio for the future. Next up, on 4th place, we have Teradyne, a semiconductor equipment and materials company. And they also have 9 out of 10 score. It has a very low dividend yield of 0.36%, but it's raising it at a quite high pace, but it might take a while for this company to actually yield a lot. So if you're looking for a high dividend, this might actually not be the company right now, at least. Next up, we have HPQ, and this is the computer hardware company making laptops and such, not to be confused with the other HPE, that's the enterprise company for servers, etc. And recently actually Warren Buffett bought a big size of this company. It has also 9 out of 10 points and is actually a has been raising its dividend for 11 years and has a very low payout ratio, only about 21%, but falls a bit short on its return of capital, but otherwise it looks really good. And on number 2 we have ADP, Staffing and Employment Services Company, also 9 out of 10 points. And this company is soon a dividend aristocrat with 23 years of increasing its dividend, a nice debt to free cash flow ratio, and also overall very, very strong earnings numbers, I would say, with earnings both growth estimates over 13%. So that's really, really high. But a bit low on the yield side, but with a growth rate of 12.36%, the yield is gonna kick up in the next coming years probably. And the first place goes to BlackRock, the investment bank asset management in the asset management industry, with 9 out of 10 points. So actually no 10-pointer this month, but it was really close, because for BlackRock it looks really great, both on the sales growth, earnings growth. They are buying back shares, they have a nice yield, healthy payout ratio, growing the dividend like crazy with 13% growth rate, and has been increasing it for 18 years. It only falls a bit short on the earnings estimate, but it's not by much. I have the threshold set to 8%, so I wouldn't sweat it too much. So yeah, there you have it, the top 10 for May. And as a bonus, I have decided to show you a bit of extra valuation in fast graphs for these top 10 companies. So let's get into that. First up, ADP, which seems to be trading a bit out of its normal PE ratio, which is the blue line. The orange line is valuation line if the PE was 15, and the blue line is what the stock has been trading for. So this is, we can see ADP actually is valued a bit higher. But if you look out to 2024, this one has a probability of an total annual return rate of 8.4% per year. Next up, A.O. Smith, and it looks like this. We can actually see A.O. Smith is trading below its normal valuation, and it has a total annual return rate of 23.7%, if the analysts has estimated right. And for BlackRock, we can also see it's trading below its normal valuation, and it has a probable annual return rate of 19.5%, which is really good, because I would say the average return rate of the S&P 500 is around 10%. Next up, we have Costco, and Costco's valuation is really, really high. It needs to drop a lot to be seen as a good value play at least. And it actually has a negative return rate. So I would say let's wait a bit for Costco to get in some more reasonable valuation. Next up we have HPQ, and here we can see why Warren Buffett probably picked up shares of this company. It's trading very cheap. It has a PE of 9, and we can see its normal PE is actually 11, and only with a PE of 11 this has a total probable annual return rate of 16.6% per year. Next up we have Eli Lilly, and Eli Lilly really has peaked a lot the last 1.5 years, so this one needs to come down quite a lot to be a value play. It also has a minus in its return rate. Procter & Gamble, yeah, people are flocking to a bit more safer place nowadays with all the small companies and tech really dropping that much. So companies like Procter & Gamble and consumable staples companies are quite high valued. And here we have Sherwin-Williams, and it's going very good for Sherwin-Williams, but yeah, we can see its normal PE is 26.6 over a 10-year period, but yeah, the estimate is still 8.2% annual return rate. And here we have Snap-on, and we can see Snap-on's sales seems like it's gonna be maybe decreasing a bit even from 23 to 24, but the valuation seems okay, so even here we can project a total annual return rate of 11.8%. Teradyne, let's see how it looks here. Looks like a very cyclical stock, and seems like it's gonna be some decrease in earnings for this year, but then it's gonna predict go higher, and a nice 16% return rate for Teradyne. And that was the last one. So I really hope you guys liked the top 10 for May, and comment below which one you think is your favorite of these ones, or maybe you have another favorite. So thank you guys for this time, and see you later. Bye.